Dear ones, welcome to the CA Cafe, putting news to use. The C of Commerce syllabus always tags along with its precedent B. The B here stands for bonds. You will study so much about bonds in finance and tax laws. So today's focal point is on bonds, and we'll map some latest and relevant news around bonds to our books. What is a bond? It's a fixed income security or a fixed income instrument, or we can call it a debt instrument. And what is this fixed income called? It is the interest that is paid to the bond holder by the bond issuer. This interest rate, is it just called interest rate when it comes to bonds? No. Hey, the name is bond, thoda alag hi hona hai. The interest rate is called the coupon rate. Amongst other things, this coupon rate is what attracts investors to buy bonds. But our biggest lender, SBI, last week, it sold bonds called as additional tier 1 bonds with a coupon rate of 7.75%. Actually, this has been the lowest rate so far in this financial year. A few days prior, HDFC issued these 81 bonds. Bank of Baroda also issued these bonds. The coupon rates were much higher. HDFC had 7.84%, Bank of Baroda offered 7.88%. Bank of Maharashtra offered the high coupon rate of 8.74%. Of course, the bond issue size varies. SBI's issue size was around 6,800 crores, vis-a-vis Bank of Maharashtra's was 710 crores. You know, this article, it has some important keywords, okay, in addition to bonds and coupon rate that we just talked about. The other words are yield, bond pricing, callable bonds, and 81 bonds. So what is yield? It is the rate of return on the bond. Yield is different from interest. Interest is what you earn regularly from the bond, but yield is its internal rate of return. So basically, if you hold a bond and say that bond is actually traded in the secondary market, it will have a market price due to buying and selling of the bond. You have to know whether it is profitable or not to hold the bond. So we need to calculate the yield on the bond. The other term for yield is discount rate. You will discount the future cash flows from that bond to its present value today and compare it vis-a-vis to the current market price of the bond. And generally, the yield on government securities is kind of, the benchmark for deciding the issue price of bonds. So what we do is we compare the yield percentage with the coupon rate, that's basically the interest rate, to decide how the issue price of that bond will be. As you would see here, if the yield percentage is equal to the coupon rate, then the issue price is at face value of the bond. If the yield percentage is more than the coupon rate, then the bond issue price is at a discount, means less than the face value. If the yield percentage is less than the coupon rate, that means the yield percentage is less than the interest rate on the bond, then its issue price is at a premium, means more than the face value. Now, this news article also says SBI's 81 bonds, okay, they have a 5-year call option. This means SBI has the right to call back its bonds and say, hey investor, give me back my bond and here's your money. So the bank can redeem the bond before its maturity at a predetermined price called as the call price. But remember, this is only an option to the bank. It is not an obligation. So bank can decide to not call back its bonds also. If a bank is in some financial trouble, it will not call back its bonds. This is what happened in the case of Yes Bank. That takes us to our next news article. SEBI slaps rupees 2 crore fine on Rana Kapoor. You know what happened in this case? The full value of the 81 bonds that Yes Bank had issued was written off. It was around rupees 8,400 crores. All this and more harm was done under the mismanagement of its former MD and CEO Rana Kapoor. He claimed them to be super fixed deposits and he induced retail investors to buy those bonds. So much of losses to the investors. Hence, SEBI hit a fine of rupees 2 crores on him last week. Now, one of the defaults by Yes Bank was in relation to 81 bonds. And whatever bonds were issued by SBI last week were also these 81 bonds. What are these 81 bonds? These are basically perpetual bonds. You know, bonds usually have a certain life, a maturity period after which they are redeemed. That means they are bought back by the issuer after paying the redemption money to the holder. But perpetual bonds, they do not have a maturity date. They exist till the bond issuer is alive. So interest is continuously and regularly paid. So 81 bonds are perpetual bonds and they are issued by banks to fulfill their capital requirements. They are required to be issued as per the Basel III norms of RBI. Friends, the world stage is changing. Russia just got excluded from the JP Morgan Global Bond Index. And who's going to be the new entrant? India. See, global bond indices are similar to our stock market where bonds are traded, but outside India, like the Nasdaq or Dow Jones for shares. And India has the biggest bond market among emerging economies, but it is yet not included in the global indices. But with this new move, Indian government securities would get listed on the global bond index, and foreign investors will invest and bring in billions of dollars into India. Everything sounds good, but one dicey bit is the settlement procedure. What is settlement? See, it's as similar to what happens in stock markets between a buyer and a seller. The bond has to go to the buyer's account and the consideration for this trade has to go to the seller's account. This is typically a settlement. In stock markets, in India, it happens in T+2 days. But in bond market, India has longer procedures. However, globally bond settlement is done via Euroclear. Note this term, Euroclear. This is basically a global clearing house. India wants local settlement and not overseas, so that there are no confusions arising around capital gains, and India does not want to give tax exemptions for overseas transactions. But even though this hiccup is there, it does not seem to dampen the investor feelings for our bonds. Let's wait and watch what happens. For now, this is big news indeed. We saw the news about bonds inclusion here. Now there is a news about bonds exclusion. Yes. Do you recollect reading about Section 54 EC in the Income Tax Act? This is one of the sections that gives capital gains exemptions when the capital gains are invested in the bonds of National Highways Authority of India or the bonds of Rural Electrification Corporation of India or some other notified bonds. Now, the bonds of National Highways Authority are being discontinued. Why? The government wants to control the mounting debt of the highway authority. Well, so much bonding with the news around bonds. Hope you enjoyed this episode. Remember to deep chat on these news bits when you're studying bonds. And do subscribe to our blog, thecacafe.in. Until the next episode of Putting News to Use, bye-bye.